Okay, picture this. It's early 2026. The tech world, which felt like it could do no wrong, just slams into a wall. All those high-flying stocks suddenly take a nosedive, and pure panic rips through the market. This wasn't your garden variety correction, not at all. So what on earth really went down during the great tech sell-off of 2026? Well, let's get into it.
And when I say nosedive, I mean it. We're talking about a brutal 15% drop in high-growth tech indices. This was a violent shock to the system that left investors absolutely scrambling, trying to figure out what just hit them.
So you have to ask what sparked this kind of panic. It wasn't a recession, it wasn't some big financial crisis. The fear, ironically, came from the one thing everyone thought was the future: artificial intelligence. Yeah, this whole event, now known as the 2026 tech sell-off, was this really brief but incredibly intense period where tech stock prices just fell off a cliff. And what's wild is that the driver wasn't something old. It was a brand new fear, born directly out of the AI revolution itself.
See, at its heart, this was a massive reality check. For years, tech stocks had been soaring to, just astronomical heights. But suddenly, investors had to ask this really uncomfortable question. Are these companies really worth this much? Especially when a new technology is threatening to rewrite all the rules.
And the answer to that question, and really the trigger for the entire panic, it all comes down to a single, unbelievable number. A number so huge it forced the entire market to stop and rethink the future of software as we know it.
$600 billion. Just let that sink in. That's the amount of money the hyperscalers, we're talking the giants like Alphabet, Amazon, Microsoft, suddenly announced they were planning to spend on AI infrastructure. This wasn't a slow build. It was an all-in, overnight spending shock.
And you got to understand, this money wasn't for cool new apps or services. No, this was for the actual guts of AI, the chips, the data centers, the hardware, and the insane amount of electricity to power it all. And that huge upfront cost, with zero guarantee of a quick profit, well, that's what really started to spook investors.
So, what was the tech that was scaring everyone? AI agents. You can think of these as little bits of software that can just do complex stuff on their own. And the absolutely terrifying realization for investors was that these agents could make entire categories of software we use every day, especially SaaS products, totally and completely useless.
So, faced with this one-two punch of insane spending and a disruptive new tech, how did the market react? Well, it didn't just crash, it fractured. The shock created this deep split, what we call a K-shaped recovery, where one group of companies shot up while another just plummeted.
The financial term for what was happening is valuation compression. But let me put it simply. Imagine you own stock in a company. If investors suddenly realize an AI agent can do that company's job for almost free, they are definitely not going to pay a premium for your stock anymore. The company's value has to compress to reflect that scary new reality. And all this set off a clear chain reaction in investors' minds. First, you have the spending shock from that $600 billion number. That immediately leads to the growth question. Will they ever make this money back? Then, as AI agents started to look like a real threat, you get a full-blown software panic. And the final step? A massive rotation of money. Investors started selling vulnerable stocks like crazy and piling into something else.
And that rotation was dramatic. Money just flooded out of those traditional software companies, the ones that looked like they could be automated away. And where did it go? It poured into AI infrastructure. The companies selling the picks and shovels for this new AI gold rush. That right there is your K-shape in action. One arm of the market goes up, the other goes way, way down.
Now, this rotation wasn't just some abstract idea. It created a very, very clear list of winners and losers. So let's actually break down who came out on top and who got left behind.
Yeah, the split was stark. It basically created a brand new set of darlings on Wall Street and a new class of companies that nobody wanted to touch.
Okay, so here's the scorecard. On the winning side, you had companies like NVIDIA making the must-have chips and Oracle building out the data infrastructure. And the winning sectors? Energy and utilities. Because, surprise, AI is incredibly power-hungry. And the losers? Well, companies like Salesforce and pretty much the entire SaaS software sector suddenly had their whole business model thrown into question. The theme couldn't be clearer. Infrastructure won, legacy software lost.
But the story doesn't end there. After that initial shock and the huge rotation of money, the market was left with a kind of AI hangover. This period of real uncertainty and risk that lingered, even for the companies that came out on top.
Because here's the catch. That $600 billion investment is still a massive, massive gamble.
Just because a company was a winner during the sell-off, that doesn't mean their future is all sunshine and rainbows. There's just no guarantee this giant bet on AI is going to pay off anytime soon.
And those risks are very, very real. I mean, how long is it going to take to actually make money from all this? Some of these companies are taking on junk bond levels of debt just to stay in the race. Then you have the physical problems. Can our power grids even handle this? And with so few giant companies dominating, the whole system is actually pretty fragile.
Which, of course, leaves us with the ultimate question. We've seen the panic, we've seen the rotation, and we see the enormous risks. So is this AI revolution truly the engine that will power our future growth? Or did the biggest names in tech just place a $500 billion bet that's simply too big to fail, until maybe it does? The market placed its bet back in 2026, but we're the ones who will have to live with the outcome.